Hello, everyone, and welcome to the latest episode in the D&O Diary's continuing series of podcast recordings. Today, we are going to be discussing federal court securities class action lawsuit filings during the first half of 2026. We will get to the numbers in a minute, and we'll discuss what they mean shortly. But first, I want to start out with a question. Kevin, why do we care about the numbers of class action lawsuit filings? Why do D&O underwriters follow these numbers so closely?
Well, a securities class action lawsuit is the largest severity risk for a D&O underwriter, and especially for those that concentrate on public company D&O, and in particular, those that concentrate on primary public company D&O. This is by far their largest source of loss costs. And the numbers tell them a lot. The numbers will tell them what they can expect from their underwriting year profitability. And it also is important information for them in trying to calculate their profit-making price. So for that reason, it becomes indispensable for them to follow these numbers. And you can be sure that the numbers we're going to be discussing here in this podcast are being studied very closely by the D&O insurers.
So let's talk a little bit about what these numbers show us for the first half of 2026.
Well, the headline number is that during the first 6 months of 2026, there were 118 federal court securities class action lawsuits. And I emphasize federal court because all of these figures include only federal court filings. They don't include state court securities class action lawsuits. So that 118 in the first 6 months of 2026 contrasts to 111 in the first 6 months of 2025. So right there, we see an increase. The filings for the full year 2026, you would extrapolate to a total year-end figure of 236 securities class action lawsuit filings. That projected 236 compares to the full year 2025 when there were 207 securities class action lawsuits. And if you compare that projected 236 to 1996 to 2024 annual average of 227, you'll see that the half-year filings and the projected full-year filings show an annual total greater than both the full year 2025 and the long-term annual average. So I think the sort of headline news is that we're seeing and projecting an increased number of securities class action lawsuit filings in 2026.
So even with that increase in filings, it still seems like the filings in general fall within a narrow range. Why do we follow the numbers so closely, even if there is just kind of a narrow range of how many filings are occurring year over year?
You're right, Sarah. It's been pretty steady for years, in fact, for decades, that the annual number of lawsuits fall within a narrow range of around 200. Now, there have been exceptional years, and there's almost always an explanation for significant blips up or blips down. But by and large, you're right. They fall within a range around 200. But the differences matter. The difference between 200 and 220 could mean significant differences in the financial results for the leading public company D&O insurer. And similarly, were there to be a significant drop-off in the number of filings, that would have further implications. And for any given D&O insurer, a few securities class action lawsuits more or a few class action lawsuits less could make a big difference in their financial results. And so it seems like relatively incremental differences between the years, but those differences matter. It can really affect the insurer's results.
Yes, certainly. I have seen that real time in my prior experience as a head of claims and overseeing the securities class action lawsuits. The expenses can be tremendous and make a big difference in those underwriting results. So thinking about what drove the number of filings in the first half of 2026, what were some of the themes that we have seen and been tracking?
Well, it's a good question to ask because there almost always are themes. There are things that emerge when you look at the data. And in this case, it's clear that one of the themes for the first 6 months of 2026 was an increase in AI-related securities class action lawsuits. There were, of course, AI-related lawsuits in 2025 and prior years as well. But for the full year 2025, there were a total of 14 AI-related lawsuits. Well, in the first 6 months of 2026, we already have 13 AI-related security suits. So almost the total to the equivalent for the full year 2025. So AI-related filings is clearly one of the important stories. There are other things that are driving it. Beginning last August, we started seeing securities class action lawsuits filed relating to the Trump administration's tariffs. And there have been a total of 5 of those beginning in August 2025, including 3 in 2026. Another theme that emerged during the first 6 months was the number of cases alleging various kinds of market manipulation. And I know that's a story you've been following closely on the blog. I think it's probably important to explore those cases a little bit and talk about what they may signify.
Yeah, absolutely. And I think, what we have seen with market manipulation are certain categories that fall within kind of that overview where we've seen the traditional pump and dump type cases, which involve the low float, meaning there's less shares available to the public, more owned by leadership type of publicly traded companies that are often non-US domiciled, but they're being traded on US markets. And with the pump and dump schemes, the allegations are that insiders levered artificial intelligence, social media like WhatsApp, Facebook, to pump up the stock price and then sell as insiders at the higher price. We've also seen trading halts happen on those particular types of companies. Along with the pump and dump cases, we're seeing stock promotion cases that may have similar allegations. Oftentimes, again, there seemed to be that theme of non-US domiciled companies and a low float that makes it easier for the stock price to go up increasingly high and then be sold by allegedly insiders when it's at a higher price. And we also recently saw a case that is really sounding in what sounds like spoofing, which means that it was a case against an asset manager instead of the company itself. And allegedly, the asset manager was driving up interest in a share of another company. And when that interest had been driven up, the asset manager was then levering that interest to hedge against and trade for a profit. So, really, again, I think with this market manipulation theme, we've seen 10 cases. There was actually another case recently filed this past week that sounds more like the traditional pump and dump case, but it's something that we are staying very much aware of, given that it continues to increase throughout the first 6 months, starting at the end of last year through the first half of this year.
I was interested when you were describing these cases, Sarah, about the characteristics of the companies that were sued. You mentioned that they are often non-U.S. companies listed on the U.S. exchanges, and that they tend to be low float companies. And I think those are important considerations for underwriters as they think about underwriting and perhaps segmenting their portfolio in light of that risk. But it raises the larger question: what are the characteristics of the companies in general that get sued? And one way to keep track of that is by categorizing the lawsuits according to the standard industrial classification of the company that was sued. The standard industrial classification is a standard matrix that the federal government uses to understand companies by interest, by industry rather. And it also gives us a way to track the industries that are attracting the most suits. And during the first 6 months of 2026, the SIC code category that had the most number of securities class action lawsuits was 7372, SIC code 7372, which is prepackaged software. And that category, that category had 16 securities class action lawsuits in the first 6 months of 2026. And the SIC code category with the second most number of securities class action lawsuits was SIC code category 2834, which is pharmaceutical preparations. And that category had 12. The two SIC code groups, that is collections of SIC code categories that involve multiple categories. The first is the group drugs. And in the group drugs, there were 19 total securities class action lawsuits in the first 6 months of 2026. And in the category computer programming, there were 17 securities class action lawsuits. Together, those two groups represent about a third of the number of lawsuits that were filed in the first 6 months. That's not a surprise. That's actually quite consistent, not only with 2025, but most prior years. I was a D&O insurance underwriter back in the late 90s and early 2000s. And during those years, you could have made pretty much exactly the same categorization, which is well known to most D&O underwriters. And that's why companies in those categories tend to pay higher D&O insurance pricing because of the greater frequency risk. But with respect to those companies, it is important to understand that the frequency varies by industry, and that's probably one of the most important risk segmentation tools that the underwriters have.
Yeah, and another factor that you and I both consider, especially given our history of being attorneys, is where are these cases being filed? So when we consider what is the venue that these lawsuits have been filed in, that's another way to categorize these types of securities cases, right?
So yes, you're right. We are both lawyers, and you're never not a lawyer once you're a lawyer. So we tend to look at the world that way. But it is important to think about where these cases are filed because there is information there as well. I mean, just for starters, in the first 6 months of 2026, 27 different federal courts had securities class action lawsuit filings, but they did tend to be concentrated in certain courts. The Southern District of New York had 36. The Southern District of New York had 36, and the Northern District of California had 20. And there's some reasons why the cases concentrate in those districts. First of all, the Southern District of New York is, of course, where Wall Street is located, so tends to be the place where financially related claims are filed. And also because it's where the stock exchanges are located. When foreign companies are sued in the United States, those tend to be filed in the financial district, and that tends to swell the number of case filings in the Southern District of New York. The Northern District of California, of course, includes Silicon Valley, the San Francisco area, high concentration of high-tech companies and biotechnology companies. And so every year there is a significant number of securities class action lawsuit filings in those districts. If you take California and New York generally, there's pretty consistently somewhere between about a third and a half of all the federal court securities class action lawsuits just in those two districts. But that's because of the characteristics of the companies subject to jurisdiction in those courts rather than some unique or distinct risk characteristic of being in those districts.
Well, and I think you and I have both briefly touched on this particular aspect, especially when it comes to the Southern District of New York and what I mentioned about the characteristics of some of those market manipulation cases. But let's talk a little bit about what the filings against non-US companies during the first half of 2026 look like.
Well, during the first 6 months of 2026, there were a total of 21 securities class action lawsuits filed against companies that are U.S. listed but based outside the United States. And those 21 lawsuits were filed against companies in 9 different countries and Hong Kong. The countries with the largest number of securities class action lawsuits filings were respectively China, which had 4, plus another 2 in Hong Kong, and then 3 each in the Netherlands, Israel, and Singapore. Singapore is kind of an unusual one to see on that list, but I think it's because of those pump and dump cases you mentioned that a number of Singapore-based companies wound up getting caught up in those kind of lawsuits. It's an interesting thing about the number of lawsuits against foreign companies is that they tend to be, the proportion of foreign companies on the exchanges remains pretty steady, but the number of lawsuits against foreign companies ebbs and flows, having more to do with the characteristics of the companies that are sued than the countries involved.
Yeah, and if we think about is something else going on with kind of this increase in the foreign companies being sued in the United States, why do we think this increase is happening?
Well, I think it's a common misperception, perhaps through lack of careful analysis, that these companies are being sued because they're based outside the United States. But the reality is the Irish biotechnology company is not being sued in the U.S. because it's Irish. It's being sued because it's a biotechnology company and has the characteristics that tend to make that industrial class one with a greater frequency. Similarly, the Israeli companies that are being sued are not being sued because they're Israeli companies. They're being sued because they're high technology companies. Again, a category that is subject to a high
So what observations do you think that D&O insurance underwriters will draw from these first half of the year filings?
Well, first, they will note the apparent increase, and that is noteworthy, and that will be important information from them. It will send those signals about their potential profitability for the year, and probably will encourage them to think about pricing adequacy. Are they getting enough premium for that level of risk? But they're going to look at those themes we discussed before. I think they're going to look at the AI related cases. I know for a fact that, insurance underwriters are thinking very carefully right now about how do you price for AI risk, particularly depending on how any given company is using AI, whether it's a technology company making AI models or it's just an operating company trying to adapt AI to its operations. We didn't discuss it at length, but I think there's probably concern about the tariff-related cases. Certainly the market manipulation cases for the D&O underwriters that traffic in that space, that are writing foreign companies or that have a portfolio that consists of low float companies. And that's another concern that will clearly have underwriting implications as well.
So do you think that's kind of your preview for the second half of 2026, that those themes will continue?
Yeah, my crystal ball is no better than anyone else's, but I do think we can pretty reliably assume there are going to be more AI-related cases. I think we've already seen evidence that the number of market manipulation cases is going to continue. I think geopolitics generally, including the tariff cases, is another area to watch. I feel pretty comfortable that by the end of the year, we're going to see that there was an increase for the year in the number of securities class action lawsuit filings. And obviously that has important implications for the D&O underwriters. So those are my thoughts for 2026. What are your thoughts and expectations for 2026?
Well, I think I'm certainly aligned with kind of where these themes are developing. And I do believe that the disclosure risk with respect to certainly artificial intelligence, but even what we're seeing with geopolitical and tariff related risk, mentioning the potential impact seems to be something that securities class action plaintiffs are beginning to latch onto. So I do think that there are governance hurdles that need to be overcome, definitely with AI. But I do believe that we are going to continue to see this increase in securities class action filings that are attached to kind of this public disclosure or disclosure risk in line with these themes. And as we've already discussed, we've seen another market manipulation case filed after the first half of 2026. So certainly as those cases continue to increase, we'll watch what that might do in terms of the overall feeling of the market and public filings, whether or not underwriters need to be looking at that low float risk factor. Well, Kevin, those are my thoughts. And this was a wonderful conversation about our securities filings in the first half of 2026. We want to thank everybody for listening to our D&O Diary podcast series. And until next time.
Thank you, everyone. We'll look forward to talking to you again in our next podcast.